So get this. On one single day, the market had a total split personality. You had a stock in Japan that just completely nosedived right at the opening bell. Meanwhile, over in South Korea, another stock was getting ready for this massive, explosive rally. So what we're going to do today is break down how one single trading tool managed to read both of these wildly different situations, pretty much moment by moment.
I mean, this is the big question every trader faces, isn't it? When things start moving, what's the play? Do you try to be a hero and catch that falling price at the absolute bottom? The classic catching a falling knife? Or do you play it safer, wait for a real trend to show itself, and then jump on for the ride? Well, these two scenarios we're looking at today put that exact question to the ultimate test.
So the system we're analyzing here isn't just your run-of-the-mill indicator. It's got this cool feature called a dynamic bias score that's basically trying to read the market's mood. Is everyone feeling bullish, bearish, or just kind of neutral? You can almost think of it like a weather forecast for the stock. And then it uses that forecast along with some really specialized signals to tell you what to do. So yeah, let's see how it held up. Okay, let's get right into it. Scenario number 1, the crash. We're looking at a Japanese stock that kicked off the day with what's called a massive gap down. All that means is it opened way, way lower than where it closed the day before. And let me tell you, that is a classic you can't miss it sign of pure panic. And wow, this really tells the entire story in one picture. You can see the system flashed a bearish warning right at the start, a big red flag about that panic. But then look what happened next, this incredible, sharp, V-shaped recovery from the lows. So the real challenge here wasn't just, surviving the drop. It was having the nerve to actually jump in and profit from that bounce. And just to put some numbers to this, the price didn't just drop, it absolutely cratered. It went from 1,740 yen and just kept plunging until it finally hit a floor around 1,718. See that first huge red bar on the chart? Yeah, that's just pure, unfiltered selling pressure. Everybody wanted out. Okay, now this is where it gets really cool. At the very moment of peak panic, when everyone is selling right as the price hits rock bottom, a green 0.1 up signal pops up. Now, this isn't just any signal. It's a special reversal signal. And its whole job is to find that exact point where the selling has just completely exhausted itself. And get this, it nailed the absolute bottom of the crash. Incredible. And here's the proof that something was changing. That bias score we talked about, it shifted from a very bearish -8 up to -5. Now look, I know that doesn't sound like a huge leap, but trust me, in the middle of a free fall like that, it's a massive deal. It was the system's way of saying, okay, the worst is over, the panic is fading, and the market is trying to stand up again. All right, let's totally switch gears now and head over to our second scenario in South Korea. This one was a whole different beast. Instead of a big, obvious crash, this day started out just messy. It was confusing, choppy, and then, out of nowhere, it just exploded into this incredibly powerful rally. And you can see it right on the chart. The morning was just a mess, right? The price was just bouncing around sideways, not really going anywhere. And the system's bias score? It was neutral. It perfectly captured that feeling of uncertainty. And honestly, that's just as valuable as a warning, because it was telling traders, hey, maybe just sit this one out for a bit. Stay on the sidelines and let the market figure itself out. But then, everything changed. As soon as the stock broke free from that sideways mess, the bias score just shot up. We're talking a strong bullish 16. And this right here is really the star of the show for this system. It gives you this super clear, impossible to miss green light when a real trend is starting. It's basically screaming, okay, it's go time. So how did the signals themselves change? This part's pretty fascinating. While things were all choppy, you got these mixed signals trying to find a reversal. But the second that strong bullish bias locked in, the system totally changed its strategy. It started putting out what are called continuation signals, the 0.3, 0.4, and 0.5. And these signals have one job and one job only, to help you find a good, relatively safe spot to jump into a rally that's already moving. Okay, so we've seen this thing handle two totally opposite market situations with, frankly, stunning accuracy. The big question is, how? How does it know which strategy to use? How does it tell the difference between a panic that's about to snap back and a breakout that's about to take off? Let's pop the hood and see what makes it tick. The first mode it operates in is called mean reversion. This is exactly what we saw with that Japanese stock. The basic idea is pretty simple. When a price panics and drops way too far, way too fast, it's probably going to bounce back, at least a little. towards a more normal price. So the system goes bottom fishing. It's trying to pinpoint that exact moment it's going to turn around. And then you have the second strategy, strong momentum. This is what it used in the South Korean rally. In this mode, the system basically decides, okay, this breakout is for real. It sees that a powerful trend is forming, and the goal isn't to fight it anymore. The goal is to join it. So it starts looking for those safe entry points so you can ride that wave. This table really lays it all out perfectly. Let's just walk through it real quick. For a crash or mean reversion, the key signal is that 0.1 reversal. The bias score starts moving back towards neutral because the panic is over, and your whole goal is to catch the bottom. But for a rally or strong momentum, you're looking for continuation signals. The bias score goes full-on strong bullish, and your goal is to align with that trend and hold on. It's like two different playbooks for two completely different games. Here's maybe an easier way to think about it. Mean reversion is like catching a basketball right at the exact moment it hits the gym floor. You're anticipating that bounce based on how hard it was thrown down. You're catching it right at the point of impact. Strong momentum, though, is the total opposite. Imagine that same ball, but now it's been dropped from the top of a skyscraper. You're not going to try and catch that thing. That would be a very bad idea. Instead, you just recognize the incredible force behind it and you move with it as it picks up speed. All right, so we've seen what it can do and we've looked at the logic behind it. But let's be real, no system is perfect. So it's time for a fair look at the final verdict. What are its biggest strengths? And just as important, where does it fall short? So the pros. First, its ability to pinpoint the bottom of a panic sell-off is just incredibly accurate. Second, that dynamic bias score is awesome because it shifts in real time to keep you aligned with what the market is actually doing. And those dotted lines on the chart give you really clear price targets. Now for the cons. It can get a little confused in that messy, choppy trading right after the market opens. And because it's always looking for a turn, there's a risk it might try to call a reversal too early when a trend is just super, super strong. So what's the bottom line here? Well, the original analysis was overwhelmingly positive. It concluded, and I'm quoting this directly, the system performed very well. It handled two completely different market types effectively, a crash/panic scenario and a strong trend day. Pretty high praise. And all of this really leads to a much bigger and maybe more interesting question for all of us. We just saw an automated tool handle two really difficult market conditions with incredible skill. It really makes you think, right? In this super fast-paced world of trading, where one decision can make all the difference, how much do you trust a tool like this versus how much you trust your own gut? Finding that balance, well, that's something every single trader has to figure out on their own.